Hi, I'm Vince Molinari, and welcome to the ETF Rundown. I am joined by Rohan Reddy, who is the Director of Research for Global X ETFs. Rohan joined Global X in 2015. He works within the firm's research team, providing insights into the financial markets and Global X's unique range of ETFs, including energy, infrastructure, preferreds, covered calls, and dividend strategies. With that, I'd like to welcome Rohan.
Great to be here.
Well, delighted. So, Global X ETFs, tell us a little bit about the background, the strategy. How did you get to all these differentiating ETFs?
Yeah, we are a very innovative asset manager. We manage $40 billion in assets. We have a wide variety of product lineup, including over 90 ETFs that we offer. We offer a number across thematic, income, commodities, as well as a number of other different areas. And we always like to think that we're on the forefront of the next big idea, too.
I love it, and I guess it's your tagline, Beyond Ordinary ETFs. So, job well done by the marketing department, kind of says it all there. Jump into some of the ETFs. We have XYLD, XYLG, and DJIA. Tell me a little bit about them.
Well, to start off, these are covered call products. So essentially, the way a covered call strategy works is you buy the underlying stocks within those indexes, and then you write a corresponding covered call on them. So for XYLD, we're writing 100% of the notional value of the equities that we own in the S&P 500, and then we write an index option on the S&P 500. This is done at the money. So we are foregoing the upside. However, the benefit for investors is you get a little bit more premium from writing that option at the money.
And how does that play in this kind of environment where we've got kind of interest rate movement? Are you seeing more activity around that or less?
We've been seeing a lot of activity come into these funds, a lot of fund flow on the positive side. And the reason is interest rates are rising, yields are rising right now, and investors are concerned about how they can get income in this environment. So XYLD and some of the other products that we offer are great solutions for investors to maintain equity exposure, but also monetize some of the volatility that we're seeing in the market.
And pretty strong strategy of holding on to some of that core asset while capturing some premium for the income.
Exactly. And as we see some of the sideways markets hit just general equities, we've started to see a lot of interest in these covered call strategies because of that, because you're maintaining equity exposure, but also in some cases outperforming the reference index because of the excess premiums that you're getting on those call options.
And what do you guys offer if somebody's looking more for growth?
Yes, we actually offer an interesting ETF on the S&P 500 side that is ticker XYLG. This is a play on a covered call strategy, but also maintaining some of that upside potential that maybe would not be there if you wrote 100% of the notional value of a product. So XYLG writes 50% of the notional value of the underlying equities, meaning you essentially get half the premiums, but then you also retain half of the equity upside. So it's a nice balance for investors who want both the equity upside and then also getting some income on top of that.
Terrific. I think there's one we didn't cover, DJIA, if I have it right.
Yes, DJIA is our newest product. We launched that in February of this year, and it was really because of investor demand that we started to launch some more products, including DJIA. And it's a pretty simple strategy, again, writing 100% of the notional value of the Dow Jones Industrial Average Index. But the Dow Jones is one of the oldest indexes in the world, and we still see a lot of investors follow it. It is unique in that it's price weighted, and so a lot of investors do benefit from some of the unique equity sector exposure that you get on the Dow Jones, and we've already seen some positive fund flow come into that fund as well.
So if I follow, and I try to follow all of it, pretty sophisticated differentiating strategies that I would say largely very institutional oriented, but are you seeing that ability of, because of the ETF, more retail investors having access to it, that level of sophisticated product?
Yes, and you hit the nail on the head, is that we're essentially through the ETF structure democratizing some of these complex strategies, such as covered calls, which investors may have traditionally done through brokerage accounts or using other more complex option strategies. So as a professional manager, we are managing the underlying mechanics of writing the call options, managing the rolls on a monthly basis that occur, and then also buying up and rebalancing the equities as needed. So Traditionally, more institutional investors have been in complex option strategies, but we've seen over the last few years a lot of retail interest in general option strategies. And of course, as ETFs have started to become more popular, more investors are starting to pursue the ETF strategy using things like covered calls.
Is that one of the reasons you chose to launch these type of ETFs, or what was the strategy behind each of these launches?
We always listen to our clients, and so for our clients, one of the top concerns that came up over the last few years has been, how do I get income in this environment, and how do I do so in a different way other than equities or fixed income? Derivative strategies were a previously unexplored area of the market, and we decided, why don't we pioneer some of that institutional knowledge that we have and bring it into the ETF structure. So for some investors, it was a combination of just having differentiated exposure that wasn't correlated to the rest of the market, but also having a new type of strategy in a rising rate environment like we're seeing today.
Terrific. So looks like the innovation, the forward thinking of the New York Stock Exchange was the right spot for you to launch these products.
Exactly, and we have been longtime partners of the New York Stock Exchange, and they've been very helpful in facilitating get some of these really complex products to market and do so in a very efficient manner for investors. These are also very cost-effective solutions through the ETF structure, and we're happy to continue partnering with the New York Stock Exchange.
That's terrific. Ron, as we close out, how do people find out more about Global X's ETFs? Where do they go? Where do they find some information?
Yes, for more information, you can go to our website at www.globalxetfs.com. And for more research, you can also hyperlink to our research page, which is right on our website.
Perfect. Rohan, thank you for joining us today. We appreciate you coming down.
Thanks for having me.
Our pleasure.